As we kick off a new year, we're going to spend some time today focusing on what things we'll be looking at for the corn market as we enter 2021. Today we are joined by Jeff Peterson. He's the president of Heartland Farm Partners. Jeff, thanks for being here today.
Oh, it's always a lot of fun, especially a new year, so we got a new market to talk about now.
We do have a new market indeed. So let's start out and talk about how things looked for corn, soybeans, and wheat acres in 2020 for that crop.
Yeah, we know we're getting a lot of questions about what happened in this market, and really the best way to kind of start everything and explain is go back and take a look at the acres. And anytime we start talking about the acres, we think it's easiest to talk about corn, beans, and wheat together. And so what we've done is that we've went back through 1976 and laid out how the acres between corn, beans, and wheat are all combined. And what you'll notice in the early 80s, we actually peaked out at over 240 million acres. But what you'll also notice is as we got out to 2019, it drifted all the way down to just under 211 million acres. And in this past year, we were about 218. Now, the 218 you can see is way off of our short-term peak, which happened back in 2014, which was about 231 million acres. But a general trend I'll draw your attention to, Bryce, is that if you look back, as we got into the 80s, the later 80s, we said the first part of the 80s we had a record amount of acres, and then as the farm economy got tighter and we had challenges in the late 70s and early 80s, you'll notice our acres dropped off. But then really ever since the late 80s, we've had a general uptrend that happened, and that peaked out in 2014. And then from there, we drifted back lower, and we're going to talk more about why we drifted lower as we go forward.
On that note, Jeff, what were the corn, bean, and wheat acres by crop like compared to the other years?
Yeah, as we take a look at that, that's always an important detail to dig in and look at. And something that we want to first start looking at is that on this particular chart, we go all the way back to 76, so we kept it similar to what we had before. And on what we've done is we've laid out corn, beans, and wheat separately. The blue line is corn, the red line is beans, and the green line is wheat. And what you'll notice, starting first with wheat, is that we've just got a downtrend on the wheat. We would have been at about 86 million acres of wheat back in the early 80s, and now actually in 2020, we're all the way down to a little bit over 44 million acres. And so it's just been a general downtrend, and that really speaks to wheat across the whole globe, is that within the whole globe, the U.S. is kind of a residual supplier, meaning there's a lot of other countries that physically produce wheat. And what that means is that we just haven't had to produce as much wheat. Now, as we take a look at, we'll go next to soybeans, you'll notice on soybeans peaked out in 2017. And in 2017, there'd have been about 90.1 million acres of soybeans. And for corn, we would have peaked out in 2012 at just a little bit over 97 million. Now for the 2020 crop year, you'll notice that that was about 91 million acres of corn, and then our soybeans, we came in just a little bit over 83 million acres. So that's kind of where we're sitting with our acres. So that was the base we had to work with going forward.
As we talk about the markets and looking back on 2020 and trying to predict 2021, it's those acres in the crops in the ground that we're paying attention to, but it's often the acres that go unplanted that have a big impact on the market. So tell us a little about the prevented planted acres.
Yeah, and that's really told a lot of the story. As we go back and look at the past years, and what's always interesting is that we kind of forget about here in Nebraska that there's many years in which there is prevent plant. But so to tell that story, we went back and looked at the acres on the prevent plant side for just corn, beans, and wheat, and we went back all the way to 2007. And what you'll notice on this chart is across the bottom we've got our years, and we've got our 2020 crop year is in red. And this past year, we would have had 8.9 million acres of prevent plant for corn, beans, and wheat. Now, that particular number didn't get a lot of discussion, and the reason it didn't get a lot of discussion, though, is because in 2019, because of the extremely wet conditions we ended up having, there was over 18 million acres that didn't get planted. And had we have not had 2019, the 8.9 million acres we had in 2020, this last crop year, were just planted and harvested, that would have been the largest amount of prevent plant. And those acres, those have a big impact on the starting point, our acres that we have in the ground. And so that becomes a reason why this past couple years we haven't had as many acres. And that's, as a result, it's made it so that our stocks have started to tighten up.
Let's go from acres to yield now, Jeff, as we take a look back at last year. Where did the yield come in at for corn, and how's that compared to previous years?
Yeah, and so what we've done to kind of help look at what the yield is, and that's a big variable, and more times than not, the yield number really comes back to what's going on the weather side. And what we've done to stay consistent is we went back and looked at the yield going all the way back to 1976 for corn. And what you'll notice back in 1976, the yield would have been about 85 bushel the acre. That's our national yield. And as we walk forward, you'll notice a series of lines. We've got our actual yield, what's happening every year in blue. You'll notice that they're right in the center of our two red lines that go from the lower left to the upper right. You'll notice that there's a dark red line. That's a long-term trend. And this particular year, if we go back to May, and that's when WASDE always puts out their numbers for the first WASDE report for the 2020 crop year, it would have been in May of 20. The number they started off with was a 178.5, and that would have been what we call our trend line yield. Now, because of the weather conditions that we had, we actually drifted all the way down from the numbers that would have been in the December report, would have drifted down to 175.8. So it dropped off 2.7 bushels. And we'll have to see, as we come into the January crop report, we'll see some more to see if they make any adjustments on that. But that's where we're sitting right now.
Something to keep a close eye on there, Jeff. As we continue this conversation, was last year a small crop as compared to others?
Well, and that's what it always comes down to, because we know if we bring our acres and we bring our yields together and we take a look at our production, amazingly, no, it really wasn't necessarily a real small crop. As a matter of fact, as we go back and we've plotted what the corn production is all the way back to '02, we can actually see that this particular crop year would have came in the third highest. We'd have had our biggest crop back in 2016, but we were about 600 million bushels off of that. So we did have a big crop, even though our yield was pulled back.
So we go from the supply side now to the demand. Tell us how you break down the demand by categories.
Yeah, I think the best way to take a look at the demand side, we have lots of questions always about this. And believe it or not, though, the demand side's a lot more consistent than what we see on the supply side, and that really just gets back to the weather. But where we start the whole discussion is look at each of the different categories. So we group them into their common categories, which one of them is the feed and residual. Feed and residual makes up about, for the 2020 crop year, 38.4% of our total demand. We then go to ethanol next, and that comes in at 34.1%. From there, we go on over to exports, which would be in green there at 17.9%. And then the food and industrial, that would be if you're taking anything and you're taking corn and you're further processing it. It could be corn flakes, it could be grits, it could be flour out of the corn, and that comes in at 9.4%. And then you can see there's a real small blue sliver there that makes up about 0.2%, which comes in on the seed side. So that for the 2020 crop year shows you how the demand broke down in the different categories.
Have to think that the feed category is one of the most consistent year to year. How's that been looking?
Yeah, the feed category is, and as we dig into that feed, the demand has been good. And what we look at, and I just want to kind of show you what we're seeing, when we look at our potential feed demand, this is where the numbers get a little different. Everything we've been talking about was the 2020 crop year. The 2020 crop year would have been the crop that would have been planted this past spring. It had been harvested in October, November. And so the crop year for corn starts on September 1st, 2020, and runs through August 31st of 2021. Now, USDA, when they start talking about feed, they give us a feed estimate in the WASDE report, but their supporting detail they give us at the end of the WASDE that helps explain the rest of the story is not broke down in crop years, it's broke down in calendar years. So what I'm showing you right now shows the 2020 calendar year versus the 2020 calendar year, not the crop year, but the calendar year. And what you'll see that total red meat and poultry is forecasted to be up about 0.7%. You'll notice also that eggs and milk are forecasted to be up about 1.5% for eggs, 1.6% for milk. So we are seeing a continual increase so far. Now we're going to have to watch that as we dig into this. We know there's some concern as we bring these prices up. We know cattle on feed numbers have been lagging a little bit, but what we've been watching is that we haven't noticed that it's caused a big impact yet to see a sell-off in the cull cows or maybe even some of the heifers yet. So it still looks like we'd expect a similar size calf crop going forward. The thing we are watching, though, is the hog herd. There has been a lot of expansion in hogs. On the pork side, even though here for 21 versus 20 it shows 0.6%, if we were to go back further in time, what we'd notice is that percentage has been growing more. The reason that percentage has been growing more is because everybody's been gearing up over the past few years to fill that void that was left when China ended up having the African swine fever. And so as a result of that, what we've got is that we've got build up in there, and they're trying to fill and have the tonnage that we need of pork to be able to take care of that demand. As they continue to ramp up their production, we'll have to see whether or not our pork production backs off some.
Let's shift over and talk about ethanol demand. Certainly here in the Midwest, that is such an important market for corn producers across Nebraska and other Midwest states. But over the past year, we saw just how fragile that market can be. How's that look going into the new year?
Yeah, it's something we're watching really close. Because if we'd have been sitting here talking probably 3-4 months ago, Bryce, we'd have been saying, well, we've got some pretty cheap prices expected. You know, we're getting closer. Our bigger concern at that point was COVID, maybe a resurgence and what that would do in regard to the miles driven. But now, as prices come up and basis levels are strong, not only do we have to be concerned about less miles driven, we do also have to be worried about the price they're having to pay for the corn. So far what we've seen is, and we dig into the numbers, so let's look at what USDA is talking about first. So USDA for the 2020 crop year is saying that they believe that the demand for corn that goes into ethanol will be up 4.1%. Now that isn't what we're seeing so far year to date. So crop year to date, keep in mind for this, crop year started on September 1st. Year to date ethanol production is down 6.6%. Now the quick thing that you'd look at, you say, oh man, we must gonna need a big adjustment. But what we gotta keep in mind is that last year, we got into the middle of March, COVID really kicked in, and what we ended up seeing is that we saw our miles driven dropped way off. And as a result, our ethanol production dropped way off. Now we don't think, because of the situation with the vaccine and how things are going, you know, right now what it looks like is miles driven and gasoline demand's off 10 or 12%. And that's about what they've got the ethanol, corn for ethanol demand off. So we think, even though the numbers don't support it today, we think we'll come in very close to those numbers on the ethanol of what USDA thinks, with a slight increase. The 4.1 I think is reasonable compared to last year.
It's going to be an interesting market to keep a close eye on.
Very much so.
Let's shift a little bit and talk about the global perspective. We know there's a lot of competition out there. So how do you see exports for corn shaping up in 2021?
You know, the exports have just been phenomenal. And this is a category that I didn't think we'd see this strong a demand. So probably the best way to talk about this is we went back and we went back again to 02 and we laid out what the exports are per year. And the numbers we have on here are in millions of bushels. And what you'll notice is that the 2020 crop year we have in green. And the first thing that stands out, Bryce, 2.65 billion bushels of corn for exports. You know, that will be our largest amount of exports if that gets all the shipments made that we've had, and you know, taken out the previous high in 2017 at 2.438, and we'd have had another big run back in 07, back at 2.436. And the demand so far, you know, if we sum it up, we'd say, well, what's going on? Well, China's stepped into the market in a bigger way. We also are very competitive right now, and there's some multiple reasons for that. Goes back to the fact that we did have a good crop, so we had bushels available to ship, even though it wasn't as good as it could have been. The US dollar has continued to work its way lower. We're not the lowest we've ever been, but the US dollar index makes us very competitive. The other thing that we have going on right now, and we're going to have to watch this because it is possible, even though this is a record on exports, believe it or not, Bryce, this number could go higher. As a matter of fact, I could paint you a picture that would really say that there's a possibility that we could get somewhere close to 3 billion on the export side. Now, that's a story that's going to be told as we walk forward, but a lot of that gets back all to the weather that's coming out of South America. And what we have to watch very, very close is what's going on in Brazil, and in particular what happens now going forward as it relates to their safrinha corn crop. That safrinha corn crop makes up over 75% of Brazil's total production. But what's probably more important about that is that those are the bushels from the safrinha crop that go for export. Their first crop, the one that they'll be harvesting here shortly, that gets used for domestic use, and that safrinha crop gets used for your export side, and also some domestic also. Now, what we're concerned with on that crop, though, is the fact that because of the dry conditions that Brazil had early, that prevented the beans from getting as planted as timely as they should have. So we're probably got beans planted 2 to 3 weeks later than normal. Now, as you think about that, that doesn't seem like a big deal, but something we really have to understand about Brazil is that on this safrinha crop, and this is the one that they'll be planting after they get the beans harvested, and they're just starting bean harvest now, that particular crop, as it gets out to the end in the pollination, it has a tendency to go into a period of time and weather for Brazil that is warmer and drier than what it ideally would like to have to finish off a corn crop. And what we're doing is we're pushing that crop just a little bit later, which means the potential for even warmer and drier conditions is there. And what we do know already is that actually their subsoil moisture is less than ideal. So if we would see that corn crop back off, that would open the door for more exports. Because what we have to think about is that who are the world players on exports? Well, number one, US. Number two, Brazil. Number three, in a battle with number 4, Argentina and the Ukraine. Well, Ukraine had problems already. And as a matter of fact, the sole probably reason, I mentioned part of the story earlier in regard to why our exports are so high. It was because of China buying. But Bryce, the rest of the story is because Ukraine actually reduced their production because of weather problems on corn, about 8 million metric tons, and those bushels, a lot of that demand came over to the US. So as a result of that, we're sitting in a good place. We're very competitive right now, and it could even get better as we go forward, especially if we see some continued drier conditions with Argentina.
Well, it sounds like to me, Jeff, there's some reason to be optimistic about the level of demand right now for U.S. corn. Is that a fair characteristic?
That is a very fair characteristic, and that's actually what potentially, even though in the markets we hear a lot of time spent talking about what's going on and the tightness on the soybean crop, and that's definitely helped bring up prices on corn, but corn does have a story of its own. It's a story that really comes from both some adjustments that were made on production, but also then a very strong demand profile.
Well, let's shift a little bit, Jeff, and ask you, how would you describe our current supply and demand situation for the corn market?
Yeah, and to bring this all together, we've talked about ethanol, we've talked about feed, we've talked about exports, but if we bring it all together, the next chart that I want to share with you shows the total U.S. corn use, and we've taken that back to 2002, and we also have the units on here in millions of bushels, and we've highlighted on the red the 2020 crop year. And what you'll notice is that our total demand is at 14.823 billion bushels. And what stands out is that is the largest amount of corn that we will have used across corn, soybeans, and wheat. So let's just kind of think about that. We had our third largest crop, however, we ended up having, so far it looks like, will be our largest demand overall for years going back to 2002.
How about ending stocks? Where do those sit?
Well, and that's always, and you nailed a real important question there, Bryce, because we talk about a lot of stuff in the markets, and there's always stuff changing, but as we really want to try to understand what does all of this actually mean to price, we got to kind of start focusing it. And the first focus we always like to take is on that ending stock. And first of all, what I want to talk about is that ending stock. What is it? So that ending stock number, it's our total supply, okay? So what we produced and what we had carried in from the previous year, subtract off what our total demand is, and that gives us our amount of ending stocks. And what you'll notice, and the best way I can show you this is the chart I have up for you. I've got two different items laid out on this chart. The first one is the orange bars, which shows the amount of ending stocks. And I took this one back to 1998, and we're pulling these numbers directly from the December WASDE report. And what you'll notice is that here we did continue to pull down and draw down our ending stocks. We peaked out on the raw amount of ending stocks in 2016. Now, in order for us to really, though, be able to have a discussion about those ending stocks and what that ultimately could end up meaning as we go forward for price, we have to really talk about the stocks to use percentage. And what that stocks to use percentage is we take the amount of ending stocks from the WASDE report, we divide that by the total amount of demand from the WASDE report, and we get a percentage. And what that percentage tells us, okay, is that if we look at that amount of ending stocks, I want to clarify one thing on that ending stock number. When we calculate that ending stock number, that is the amount of stocks that USDA believes we're going to have left over at the end of the crop year. Okay, so it's not at this moment in time, but it's at the ending crop year. So for the 2020 crop, which is the one we're talking about, the ending stock number would be the amount of stocks we should have left over, basically stocks in excess of demand on August 31st of 2021. So if we take that ending stock number divided by total demand, that gives us our stocks to use ratio, and that would be in our blue line. And what you'll notice there is that when we compare back to past years, this is the lowest our stocks to use percentage has been going back to the 2013 crop year.
In terms of ending stocks, is that a number that's been fluctuating a lot month to month throughout the year?
It really has, and I don't think I've seen really a year, Bryce, where we've seen such big fluctuations. And that's honestly, if we were sitting here having a discussion about where we thought the markets were going to go a year ago at this time, you know, we were very concerned, and I'll be the first one to admit that we thought we'd see some lower prices, and prices did go lower. And a lot of people will say, but why did that happen? Well, the best way to kind of say why it happened, so think about this, prices went lower, then they went much higher. But why did they go lower? So the easiest way to look at that is that on the graphic I have up in front of you now, I've got two different charts. So let's draw your attention to the left side. And on the left side, it's titled the U.S. Corn Monthly Ending Stocks. And what this does, this is laid out a little differently. Each of the individual lines represent a crop year. The one that we'll talk most about is the 2020 crop year. That's in red. But you'll notice across the bottom, I don't have years there. I've got months, and I've got May all the way through, through the next November. And what that is doing is that's showing for the WASDE report, what did they show for ending stocks each time they released a number for each of the different crop years. And the thing that you'll notice immediately is you go up and look at the upper left-hand corner, 2020 crop year, our first estimate back in May, over 3.3 billion bushels of corn. Massive crop. And with a massive crop like that, what that looked like is that would have looked like sub $3 corn. Mm-hmm. And corn was on its way to that and got down to those levels before we ran into the problems. What you'll notice though, we went May to June pretty flat, and then from June to July we had a big drop, and then we continued to drop as we went forward. And that was a combination of yield coming down and the demand coming up. And the left-hand side shows the monthly ending stock numbers. The right-hand side, what I've done is I've taken the ending stocks divided by the total demand, and I've expressed it for you in a percentage. Everything else is the same. All the lines are the same in regard to the crop years. And what you'll notice is that we started at over 22% on the stocks to use for the 2020 crop year. But now we're actually, and I don't show you a lot of data here, we're going back through 2014. What you can see, this is the tightest we've been at 11.5%. And if you think about what I said a few moments ago, what I indicated is that this is the tightest we've been since the 2013 crop year. So we would expect to see it tighter than all the other years I've shown on this chart.
We appreciate folks joining us here today as we look at the crop supply and demand, particularly corn today, as we do an outlook for 2021. Jeff Peterson from Heartland Farm Partners joining us here. Jeff, we've been talking about the 2020 crop and want to make sure our viewers are up to speed here. It gets a little confusing as you outlined, but we're going to shift and talk about 2021 now. What are some of the factors that could be shaping supply and demand as you're taking a look at the next crop year?
Yeah, and that's really what we wanted to do. We kind of spent the time so far talking about this just to be able to get us to this point where we can say, okay, this is what's happened, here we are, now what does it like going forward? And there's a lot of questions, so I'll draw your attention back to the slide here so we can all be on the same page. The final corn production number, we'll get that final number in January, and the January 12th report is when they'll throw that out, and it's expected. You know, we're currently setting at a 175.8. I think we will see some lower yield coming out in that January report to take us a little bit lower. We'll continue to focus on China, and you know, China has been a really interesting topic because USDA was very slow to adjust the demand number for China because they didn't want to get too far ahead of themselves. If you go all the way back to when China entered WTO, we talked about the trade rate quotas. That was set at 7.2 million metric tons, and they didn't want to get too far ahead of that, but they did as they've heard some more talk out of China that they might increase how much they allow into the country. That is a number that we've seen the import side or the export side out of the U.S. come up. Now, what we're going to have to watch with China is we have to make sure that everything that is sold does get shipped. So we'll be watching very closely what's going on with those weekly export inspections. Those reports come out every Monday. The other thing we got to watch is the COVID. In regard to COVID, we want to make sure that we ultimately end up seeing miles driven hopefully come back up. But the thing that concerns us a little bit going forward is that we think it's going to be hard to get back up to those miles driven, which then corresponds over to ultimately demand for gasoline, which then corresponds over to demand for ethanol, because we think that there's going to be some new normals out there, and we think some of those new normals could be in regard to maybe where people work from, how much they do drive. We know there's going to be some pent-up driving that does happen, but we're going to have to watch that close and make sure the vaccine rollout goes as planned. The outside markets, right now we're getting some higher energy prices, which is good. We're seeing that in the crude oil side. We're seeing gasoline work its way up ever so slowly. We're also seeing that some on the ethanol side. And then we've got a strong tailwind that's helping us out in the corn market from soybean prices, because everything we've talked about on corn and the stocks tightening up, it's a lot more tighter over on the soybean side. And that's really helping go ahead and fuel this market moving higher. So those are some of the factors we're looking at as we go a little bit further along into this next year. In addition to that, Bryce, we're going to be watching the weather, the U.S. weather, South American weather as it finishes up their crop. In regard to the U.S., we know that we're dry. We know that the subsoil's low. Does that mean that we still can't produce a good crop? No, it doesn't. But it does mean that we have to have some very timely rains that happen. So we'll be watching that. We'll also be watching very, very closely the battle for acres and what happens on the acre side. And so those would round out the items that we're watching right now, Bryce.
You're teeing up my next question. You mentioned soybean prices being strong right now, as are corn prices. So where does that put the battle between corn and soybean acres?
Yeah, and it's an interesting battle, because if we sit back and say, okay, big picture, what's going on right now? Well, we've got the speculative traders, we've got the funds, the trend following funds. They're buying corn, they're buying soybeans, okay, and prices are going up because we've got tightening stocks, right? Not just the U.S., but we've also got the world. So the best way for us to kind of tackle this is to say, all right, on this acre side, what must each of the different crops do? And I'm going to talk first. I don't have a slide for you on beans, so I'm just going to talk about soybeans. And then I'll come to corn after that, the slide on corn after that one. So then what we've got is that on beans, our numbers would suggest to keep our ending stock number steady, we would need a minimum of 7 million acres that are going to need to come into soybeans. Now, we're not saying that corn has to go down 7 million acres, but at a minimum 7 million, and maybe more likely 8 million acres will need to come into beans just to keep us steady. Now the problem is that we probably need a little more than that to give us some comfort. So the first question is then, where are those acres going to come from? Well, what we got to remember is our prevent plant slide. There was 8.9 million acres of prevent plant out there. So there are acres that we can get. It's just that the price relationship between corn and beans is going to have to be such so that we're able to pull those acres out of the prevent plant and get them to go into soybeans. Then as we dig into corn, okay, so let's just take a look at corn. I've thrown out a lot of numbers for you, so let me kind of lay this out on this chart. The furthest left-hand side just lays out all the different categories, all the different factors and categories on the corn crop. The next columns to the right that are in green are the 2013 all the way through the 2019 crop years. And those are just numbers all from USDA. And the most important number that I'll draw your attention to is clear at the very bottom that says stocks to use. And you'll notice in 2013, the stocks to use was 9.2. And in 2019, the stocks to use was 14.4%. Now, just so we're all on the same page, as the stocks to use percentage goes higher, what that would do is that'd have a tendency to push ultimately our prices lower. As we see a lower stocks to use number, then that would indicate for us, all other things being equal, ultimately a higher price. Then I put for you in red the USDA December report numbers, okay, for corn, and you'll notice that that says our ending stocks will be 1.7 billion. If we take that 1.7 billion divided by 14.8 billion, that gives us a stocks to use of 11.5%. Then the next column over is I gave you a forecast for the 2021 crop. And what we did for the 2021 crop, we said, what would we need to do in order to keep our stocks steady if we were just kind of rounding off acres? And what that would mean is we'd need about 1 million acres for corn. Now there's room in here for corn to get tighter on that ending stock number. So it's possible down the road, if exports don't go up like we talked about, that we may get to a point where maybe corn can give up a few acres. But as of right now, we're saying corn probably needs to stay steady to maybe 1 million acres more. Beans needs to pull that in, but there's something we haven't touched on yet with beans. We can't forget about this. Easy to forget about. And that's the double crop factor on beans. Now, we don't have much double crop beans in Nebraska at all, but you know what? Kansas does, and Illinois does, and Indiana does. Now in Illinois and Indiana, that's traditionally following your soft wheat, but what we know is that as prices go higher, double crop acres, if prices are really low, make up about 4% of the soybean acres. If we get prices really high, which we're headed this way, they could make up 10% of the acres. So we'll talk more about this as we go forward. So there's extra acres that can come in also from the double crop side.
When do you start to get a sense, Jeff, throwing a random question at you, of where those acres are going to sit? When do you have a decent idea from USDA reports?
Yeah, so exactly. So let's start off. When do we first start getting our first inkling? The industry starts talking about it now. And actually last in October, November into December, as we see everything coming about from what we're hearing out of the seed corn companies and what they're seeing on the seed companies. But then our first official estimate out of USDA that's survey-based, that's a key thing, survey-based, that'll come in the March 31st Planning Intentions Report. So we'll be looking for the estimates that come up leading up to that. Other industry groups will put out estimates prior to that, but that'll be the first look at it officially.
Certainly something to watch closely. Jeff, as we continue this conversation about the 2021 corn outlook, I'm sure our viewers at home are getting mad at me and a little frustrated because I haven't asked you what everybody wants to know. Did you bring your crystal ball? We want to know the prices. What can we expect in the new year, Jeff?
Well, and that's a great question. And to probably do that question really justice, let me take you back to a monthly corn chart. And so what I've got up for you here is I've just taken our recent history, and I went back to 08, and some people will go, well, why'd you go back to 08? Or 07, actually. 08 is when we had the last, or one of the highs there at 765, but we really go back and show since 07 because that's been kind of the time in which we've been part of the renewable fuels push, or to say it another way, corn used for ethanol. And what you'll notice is we've had a number of highs that have happened over that time, But the other thing that you'll really notice is that ever since we peaked out at that 843 in the summer of 2012, we had a big downtrend that happened. And then the market went sideways. And it went sideways really all the way from 2014 all the way until we really broke out here, just really broke out just a couple months ago, really from that price range. And if we look at that, our range had really been bound from about $3 on the bottom to $4.39. We had a brief breakout in the summer of 2019, and that would have came because of our prevent plant acres and the fact that we weren't getting the crop planted. And now we've bounced back out, and actually on this move so far, the high has been 502 3/4. So there's a couple ways for us to look at this, okay? On a stocks to use basis, okay, so that's our ending stocks divided by our total demand, that number would suggest at our 11.5% stocks to use, fair value of corn would have been in about the 450 area, okay? But we're higher than that, right? So currently what the numbers are suggesting at the 502, that's suggesting a carry out of about 1.4 billion, or we're now below 10% stocks to use, and actually on our way to 9% stocks to use. So we can look at it that way, all right? The other way that we look at it is we go back and say, where have we had resistance? Well, if we look back into 2014, we've got a high at 519. That's a target that the market's focusing on. Now, one thing I need to clarify on this monthly chart, what it's doing is that it's using whichever futures month is closest to us in time. So right now, those prices are plotted off of the March futures. What we know is that there's a difference between March futures currently, the December futures are lower. You know, there's a difference of probably a little over 50 cents, almost 60 cents. We'll continue to see the old crop prices higher than the new crop, but as we go forward, we'll walk that price higher. I think on our old crop stocks, I wouldn't be surprised by the time the dust settles that we make the 525, 530 area. Now, it will take some continued dryness in South America to do it. Could we go higher than that? We could, but that's going to take additional problems with that safrinha corn crop. What's that going to mean as we look towards new crop corn? You know, I think we've got a shot at the 460, 470 type area, 480 type area. I think those are all in the cards. But we'll continue to update everybody as we go forward, as we know more information, Bryce.
Excellent. Jeff, we appreciate your time. This has been very insightful. Hope everybody's enjoyed watching along as we go through JanFest here. Jeff, if people do want to get in touch with you, have a few questions about what you said, what's the best way to reach out to you?
Yeah, give me a call at 402-366-4694. Check us out on the web at heartlandfarmpartners.com. We actually have got a spot on there where it says the corn outlook. They can click on that to get some details and actually get some as we update those outlook numbers. In addition, they can sign up by clicking on the sign up button for some free daily commentary we deliver by text or email, or you can go ahead and follow me on Twitter at JeffPeterson01.
Excellent. Once again, Jeff Peterson, the president of Heartland Farm Partners, joining us as we look at the 2021 Corn Outlook. I'm Bryce Duskid on the Rural Radio Network.